weekend all. Ira Epstein with your Spider ETF wrap-up, and this is your weekend edition for Friday, the 8th of April, 2022. You know, next Friday's Good Friday already. Hard to believe, right? So you got a shortened trading week coming at you. There's no real economic news due out on Monday. We start with bank earnings that you're going to get next week. I think on the 13th, we get the big boys starting to kick off in the banks. But if you look behind me, it's sort of mixed, but primarily red. Okay. Apple down, SPY down. Only the Dow was up of the indices. And you were down pretty good in Amazon, Tesla, Facebook, Alibaba. They're all backing off a little bit here. You know, we started talking about Twitter on the daily ones, so why not complete on the weekly ones for this week and get the weekly chart up? You have a gap in the chart. This is the Elon Musk gap. Man stepped in, surprised the market with buying over 9% of the company. What's he going to do with it? Is he going to change the nature of their business? Nobody seems to know. But I'm a chartist. If you look at this chart, there aren't many gaps. Gaps have a tendency to get filled. So if the market's going to break, it probably tries it over the next week or so to fill the gap. And to fill it, you have to get down to 40.96. This week's low is 45.83, and you settled right near the week's low. So all the explosion higher, well, that euphoria wore off. It's still a nice gain, though. You're up 17%. You know, that could be a year's gain for a lot of people. Nothing wrong with that. When you take a look at the swing line, you have a pattern of higher lows, higher highs. Now, remember what a swing line does. This brown line looks at the line before it, the time frame. On a weekly chart, it's a weekly bar. On a daily, it's a daily bar. On a 15-minute, it's a 15-minute bar. So it could be anything. It's just a time frame. And I have 5 rules. I wrote the study that says, hey, are we making a higher high, a lower low? Are we having an inside week or an outside week, up or down? And basis that, it draws the line. The reason is it's consistent. And I'm looking for the consistency of telling me, are we trending or not? When you have higher lows, higher highs, you have a trend. That would tell me that, hey, if I wanted to buy the market here and have to stop under the most recent swing line low, it has to be over here at 31.95. Am I prepared to risk 50% value of the stock? No. So I wait for my opportunities. It's one of the ways I look at it. Then I look at the markets in moving averages. Now, here we are on March 25th. The market had what we call an uptrend, but with bias down. Whenever you're under the 18-week average, you're looking for reasons to be short. Reasons don't fit in when you have a pattern of higher lows, higher highs. If the market keeps going higher, I would have thought, frankly, this is where it's going to run out of momentum to the upside. You've got a couple of moving averages and wherever the Bollinger Band is. The market moves up a little bit on April 1st, and you know Elon Musk stepped in. And on the weekly chart, the market runs into big resistance at the 100 week. On the daily, it was the 200-day moving average of closes. Where's the Bollinger Band? Right here. What did the market do today? Market came back and settled underneath the Bollinger Band of 46.84. Why? Because 5% of the time you stay out of the band. Only 5%. And the algorithm did its job. The market came down. That doesn't mean the market's peaked out yet. You're in an uptrend. But you can see where the natural resistance points come in. And if you take the enhanced Bollinger Band course I'm forever talking about here, you learn the concept, you learn the trade. And that, to me, is the key. Then we come over to momentum. It's up. So in review, the trend is up, the bias is up, momentum is up, but you never buy a Bollinger Band. Why would you if only 5% of the time you're going to be over it? The trade's waiting for a break. Maybe it's as it fills the gap. In KBE, this is in big trouble. This banking index stinks. The curve yield hasn't made anyone money. It's very difficult when you're borrowing, in theory, you're getting money up to 2 years and you're lending it out and they're about the same rate. Now, the reality is banks don't borrow at 2-year numbers. They do 2, 3, 4 month borrowing, and they are making money, and we should see that in the earnings. That will be the interesting thing this week. But the market's also saying that was then, this is now, because that's quarterly earnings. Now the game has changed as the everything from the 2 month, 3 month, the 2 year, 1 year, they've all come up rather dramatically, and that's hurting the spread of the money. That's what I think is going on. Plus, if we're going into a recession, do you really want to be in the lending business? Next issue. Then you come to XLI, higher lows, right into the upper, 18-week average of close. Each week you've been hitting that. You haven't left it. Been a little over it, a little under it. You ran into your brick wall. On the energy, you're embedded. Until the red line here closes under 79, I contend the pros on the weekly chart just keeps buying. He's looking for the pop, ideally, to the upper Bollinger Band. He could probably use a window envelope, which is a standard deviation, or the way that I use it, a little bit different to find some resistance points, but that's what I use. SPY, stuck right here. Now, you know I wrote a report to give you the idea in the stock indices of the month of April. And very simply put, if you look at the Moore Research Center, closing price to closing price, April 7th through the 29th of April, 15 years in a row, the market has gained. If you look at history, 25 years, the month of April for the stock market, out of the past 25 years, 20 years have had a gain. That doesn't mean it's still going to go that way, folks. You got to wait and see. To me, it's game on right here. Now I want to see if that's going to happen. I am not looking for new highs. I've made that very clear. I think it would be between here and half of that if the market can put on that rally. In the emerging markets, we have a failure market. The market is rolling itself down. The daily chart's got a bit bullish, not the weekly. The weekly's in a bear market saying it's coming down, and I still see that. I don't see anything friendly on that chart, except one thing. Let me come back to it. Did we have an outside week down? Here's the high and low, 44.81, 46.23. When you have an outside week, if you get over the high of this week, this coming week or the week after, the odds are very strong. Wherever that 18-day average is, it's like a magnet. You're going to go there. Keep your eye on that. Barring that, the target's the lower Bollinger Band on the downside. In the GLD market, you've had a contra trend. You've got the swing line down, but the bias, whenever you're over the 18-week average, your bias is up. The two aren't agreeing. You have the Ukrainian war drive this market 4 weeks in a row up and over the Bollinger Band and then come down. It's rare you get beyond 5 weeks. GDX and the gold miners, they're acting much better than actually the gold, and SIL, which are the silver miners, are acting better than silver. You've got the bull trend still at work. The market is trying to embed. You're not quite there. It takes 3 weeks in a row of being over 80 numbers. You have 80 week one here, April 1st. You finished off this week. You might be there the week after. We'll take a look at it. ARC. Well, unfortunately, Miss Wood is not out of the woods. She got a bounce, and she got a nice bounce. The market went from right here, as you can see, the most recent low was 51.85, and then you got up to the 72 level. But it's come back from that 72 already, $10 of it. However, I do think she's gone through the worst at this point in time that she's going to feel. I can now see the market just making a carving out, trying to figure out what next in her portfolio. Amazon pulling right on back to the 18-week average. Hard to get real bullish on Amazon and anything right now as we're going into a recession. I know we're all dying to wait and see how the retail stores did in the first quarter of the year, and I think they did well. But I've got fear about the second quarter as we've got this war going on and prices so high. If you're going into a store to buy anything, my favorite store now is Target. Apple, lower low, higher high, right back to the 18-day average. Okay, I can see it holding here. Apple's got problems, though. Shanghai shut down. Mainland China, big factories shut down. They have done some variances in the cities that they've done total shutdown to allow chip makers to keep providing what's necessary for Apple and other phone makers. However, life is not normal, and these means are getting hurt. So that's not going to be great for Apple on its earnings coming up. Tesla goes from the lower band to the upper band. So now you're just carving this back and forth. But what a run from 756 all the way back up this week to 1,152, knocking on the door of the all-time high. Who says this man's not magic? He is. Then we get to TLT, which are the interest rates. You know what I'm going to say. You're just locked in on this embedded reading, bearish as can be, rallies getting sold. That's my news back there. So I'm going to show you what we send to our futures traders. Why? You want to read it. You're an SPY trader, DIA, GLD, SIL. I can go on and on and on. Want to know what the futures are doing. What are we saying from a fundamental point of view, a cash market point of view, what we think the futures, chart-wise, as well as fundamentals in all these markets. You're trading them whether you know it or not, be it the inflation scenarios and like. We have so many special reports in this, probably every day, 50 different emails, so you decide what you'd want to see. We want to show it to you. How do I get it in your hands? It's simple. You go to our website at www.iraepstein.com, free offers on the top left, and just give it a click. You can also right now take your mouse, move it up here, click the icon. That'll do it as well. I'm Ira Epstein. You have a good day.